Alrighty, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is February the 6th, 2025, year of our Lord. And as usual, we'll be discussing the NASDAQ, the S&P 500, and the Dow Jones, which is my personal favorite, right? Today was an interesting day for me, right? I always like to stop and discuss like what I did. I traded really well up until like the afternoon session where I don't know, something came over me. I went till black the fuck out, did some shit that I'm not proud of, but the account did get saved in a way that I'm definitely not proud of. But that was just a combine account. I'm human. I make mistakes. I go on tilt, but I've gotten to the point where I'm comfortable enough, one, to admit it, and two, not to do it on something that can really hurt me stop me from getting actual money. So that's what the combine accounts are for, in my opinion. You should go over there and make mistakes, right? I definitely made some today. But a couple of them I'm going to talk about. I'm going to share with you guys some of the trades I took. Well, one trade in particular that I took that I totally mismanaged in the way that I want to trade. When I talk about mismanagement, I'm talking about inside of my system. I am a day trader, right? I am not a scalper, all right? I am not a trader that only looks, trail. There's nothing wrong with those traders. That's just not who I am, right? Or who I'm trying to become, right? Essentially, I'm looking to trade the market in the proper direction and hold that until a profit target while taking profit along the way. So when I get into the trade breakdown, you'll see kind of what I'm talking about and why I'm mentioning this. But first, let's jump right into the pre-market plan. My current conditions on the Dow Jones specifically. We're in a bearish retracement of a bullish trend, okay? So the market was bullish here, right? And we were looking for this to be a bearish retracement, which is what it ended up being. My thought process was we were bearish as long as we stayed below 220 or 233, right? We were bullish as long as we stayed above 43,962. So trading back down here was okay as long as we stayed above 962, which we did not, right? We traded through that, right? And all the way down to 664. So you can see, well, no, we traded down, but not through 43,962, like, which is way down here. So the dealing range is huge, but that's the top. Now we put in another higher low. So let's see what the market wants to do tomorrow. I said we had reached a critical level for bears to defend, and they definitely defended. Said this is the high that brought the low and multiple bearish gaps. The VIX is in demand and the open looks weak for buyers, but it's buyers though, right? Like that's me kind of expressing my fear in my macro on the charts, right? I'm letting you guys know, like, I'm very fearful of the bulls. I'm trying to work on eliminating that fear, but I'm human, so I want to admit that, right? And that's the first step of getting better, is just admitting that you have a fear, right? I said buyers have continued to push the market higher no matter what. Recency bias, right? I will look to take part in the downtrend to start, but I will trail my stop for all short entries, ultimately looking for the bulls to take back over at some point. Now, this is a mistake inside of my macro plan, because I'm not only admitting my fear, I'm giving in to the fear by changing the way I trade. From now on, if you guys see me trailing stops, going to break even, just yell at me in the chat, because that's not how I trade, right? For me, it's stop loss, TPs, right? Multiple TPs or nothing. Take the stop. That's how I want to trade. So if I'm in a trade and you hear me say, all right, I'm going to break even because it's a short, I go to short on break even I go to break even on shorts. What you should say to me, Hobbs, if you want to go to break even, then just don't take the trade. Because if I'm that afraid, I shouldn't even take the trade, period. But I'm not afraid. I'm just telling myself that I'm afraid, right? So this is going to be like a kind of a psychological beat up for myself, not beat up, but just reminder for myself. All right, so let's get into the pre-market plan. The plan was inside of this range. I was looking to short the highs and long the lows. Above this range, potential break and retest, but you can see we had supply above us, strong supply above us. So I didn't really want to play a break and retest, because my thesis was this would be a breakdown and then a potential breaker type atmosphere, right? How we come down aggressively. These 4-hour candles do not tell the story of how we came down, but we definitely came straight down all day, right? Bearish, I was looking to short week rallies into 45,127 through 45,233. I want to look to target the INWOG at 44,590 through 44,529. When I say look to target the ultimate level, that's like the last level that I'm taking profit at. But I might not make it down there with my profit targets, because if I get short here, the thesis is take profit at the PM session midpoint, right? Or this first wick right here, right, at 45,000. This was also settlement price, right? My second take profit should be at 44,859, which is PM session low. My third take profit, or in this case, this was my final, was daily fib at 762. You can see, I even write this in the chat at 5 a.m. I wrote YM short 45,140, right? TP1 45,004, TP2 44,942, and then final TP 44,862. Or I put 862, I meant 762, right here, right? And then you can see my entry, perfect. I did everything right? I was trading inside of the morning macro, which I'll show you on this review. I entered short 4 mini contracts at 45,140. Stops were at 45,154. Risk was managed. It sounds like a lot of weight, right? Because I'm trading $20 a point, but the reality is this is only a $300 trade, right? But my profit target is well over 3,000, right? So when you think about risk to reward, that's a 10R trade right there. That's a trade that I can take every day. So why am I afraid to lose on this trade, right? So I'll talk a little bit deeper into psychology as I continue, right? So to the bullish side, none of our bullish plans got hit. To the downside here, none of those got hit. So it was just bears all day long, right? So let's come down to the 15-minute. Before we go down to the 15-minute, I want to show you guys a couple of things as I was looking at price this morning. So on the daily, essentially what I was looking at, if I just take this supply zone off for my ICT traders, right here, this level right here, above this wick, you go to the daily candle on Friday, January 31st, and you just mark out this wick here, right? This is called the CE of the wick, okay? I don't know what CE stands for, but I'm sure people have told me 1,000 times. I just keep forgetting it, right? But if you take the CE of this wick, it lines directly up with the 4-hour supply zone as well, right? So you could come down, you could take the CE of the wick, or you could take the 4-hour supply zone. I just wanted to share that because I just wanted to show people like it's the same shit, right? Like ICT is supply and demand is ICT. The only difference, in my opinion, between the two is that ICT names things, specific things, so you understand what to expect out of that particular situation. So it's a little bit more specific than supply and demand is, in my opinion. All right, so I just wanted to share that real quick. Let's drop down to the 15-minute, and you can see, like, just from a liquidity standpoint, if we turn on Lux Algo sessions, right? From a liquidity standpoint, everything was underneath us, right? We had Tokyo down here at the lows. We had PM session lows, right? The yellow box, Tokyo, Sydney, and then London brought the high, right? A lot of times, what I notice is that getting up in the morning has really helped my trading a lot. The only thing that I'm working on, I was working on it last week. I'm still working on it this week. I'm just working on trusting the fact that London is still bringing the higher the low, right? When we were in consolidation, it was getting very tricky for me to follow. So let me take you guys down to the 1 minute, and I'll show you exactly how I was able to enter into these positions with a little bit, with a little confidence, right? So when I come to the market, I usually fade the 350, 410 macro. This is more like, for me anyway, this is more like me just watching the market, right? Just waking up, you know what I mean? Like, eyes still crusty, whatever. 250, 310, I saw Bud, he took shorts into this macro. I probably would have been looking to long it, but for me, I didn't do anything. I saw this and I was like, nah, I'm not gonna do anything. I'm gonna wait. Because I think I already have a bias that I want to go short. So I'm not even looking for longs. I don't give a shit how far we go up. I want to know when we shift, right? So I come down to the 5 minute, right? I'm just walking you guys through this because this could be helpful to somebody, right? So I come down to the 5 minute. We have this swing low here, right? And we have this swing high here, right? Hang on. Get my trend line here. Okay. So we come down, right? We put in this low, right? And then we push up aggressively, right? But if you come down to like a smaller time frame, you see this little low right here. Once we broke that, I'm counting that as like a bearish breakdown, right? So now I just want to see an aggressive liquidation above this high. So while I'm watching this double bottom print, I'm thinking, man, I got a little bit of FOMO. I'm still not going to trade it long because I don't want the longs. I want the shorts. So when I see this aggressive push, I get extremely excited because I know now exactly what I want to do, right? Now, I could have short here at 173, but that's not my entry criteria. I could have short here at 162, but I wanted to see these lows break. And once these lows broke, I said, okay, bet. I took this low, right? And then we printed this candle here. Right? If you see my picture, you'll see a little bit of a yellow box, right? And that's just me. I love my little rectangles, right? So when we got this rectangle here, I said, okay, anything inside of this yellow box, I'm shorting here. I shorted at 140, right? So I got short 140. And then I put my stop up above this previous candle because I knew I was in aggressive size. And my thought process was, I'm cool with getting stopped out and then re-entering if we decide to sweep this high again. Like, I'm cool with that. So I only gave it like, just a little bit of points. Like, it was like 14 points or something like that. And I think I got in on like the 30 seconds. So I put it above a 30-second high. And then we just melted. We melted straight down, hit my profit target. I took profit right here at settlement at 45,004. I got out of 2 contracts right away, right when we got to the London low, right? Because I was in heavy size. So I took 2 off here. I took 1 off here. And then I said in the chat, hey, I'm going to leave the last runner to break even and try to see if I can hold it all day long. And then this shit started to pull back, which I knew it was going to pull back, right? I knew it. Like, in my brain, I'm like, I know this is going to pull back. I've seen this movie before. You just got to hold. It shouldn't come back to your entry. But it's like the more these bulls kept coming in, more they started getting aggressive, I just punked out, right? And I sold it for 100 points, right? I ended up getting out, and this isn't bad. I shouldn't be talking about this like it is bad. What was bad is, in my opinion, I didn't re-enter inside of New York, right? I could have easily got the same entry, just a little lower inside of New York. We rallied up into the 929.30 macro, right? And I'll go down to the 2 minutes so you guys can see this because I try to go over this every day because it's going to sink in for somebody, right? I think I actually did take this short. I just punked out again. I did take this short. Yeah, I remember. I took this short. I got short. Oh my God. I got short on 2 different instruments. It's just painful watching it. Like, when you think about it, I got short 106 on the Dow Jones. And then I was short the S&P. I'll show you guys where I got short the S&P here in a second. I was short the S&P pretty much at the high as far as you can get. And I sold inside of this stupid ass consolidation, right? Then I got re-short off settlement, the rejection of settlement right here. And then I sold on the retest of settlement for break even. And then I watched the market go right to my profit target, right? Why am I telling you guys this? I could easily just keep it to myself, right? I'm telling you because we're all human, right? Ultimately, if your plan is to scalp, no big deal. Go to your scalp and do your thing. But if your plan is to hold these trades, man, stop letting the market punk you out, right? The market punked the shit out of my ass today. I'm not even gonna lie. And it's been punking me for the last 2 weeks. Tomorrow, I'm not letting the market punk me tomorrow, right? I'm gonna come in here and I'm gonna trade the market the way I know how. I'm gonna trust my plan. I'm gonna trust my stop. And that's just it. If I get stopped out, I'll look to re-enter off a new plan. But from here on out, I see the market rallying up to my area, dumping down to my area. I'm just taking the longs or I'm taking the shorts because I'm just tired. I'm exhausted with the idea of always being right, but never capitalizing on being right. So let's move over to the S&P 500. We'll go over Justin's plan for the S&P 500. Him and I actually had a really good conversation about just that, exactly what I was just talking about. It's just being tired of being tired, man. Like just tired. Just fuck it, man. Let it ride, bro. Let it ride. But his plan on the day, he said ES is very bullish, making higher highs and higher lows. Shorts for me today will only be scalps as the strong trend is up. Don't disagree with that. He said if we pull back into 6068 low volume node, then I want to look for longs targeting structure first, but ultimately going into 6105. Bearish, I can look for a quick scalp back into 6068 as we currently are rejecting 6105. He was spot on because I actually took this trade, right? So in his plan, he was looking for 6105. Inside of the 929.30 macro, we rallied right up to, you guessed it, 6105. I took shorts at 6104.75, right? I was in basically at the high, right? Market came all the way back up to my entry, and I ended up cutting down in this little clusterfuck is what it was, in my opinion. I cut for 7 points, and then I ended up getting short at 60.98, and then I cut down here at 67.7. That's a whole different story. I'm not even gonna get into that. But ultimately, what I wanted to go over specifically with the S&P 500 is recognizing when this type of price action is imminent. One thing that I was talking about with Valdez is, hey, listen, if you come into the market, just look at where 1800 is, right? Check 1800 and take your price range tool and just draw a range from 1800 to wherever you're trying to start price. In this case, 9 a.m. If that range, they call it the opening range breakout, right? That range applies to every session, not just New York, okay? If that range from 6 p.m. to 9 a.m. is 19 points, it's a high probability that range could continue. And even if it doesn't, just draw a line top to bottom. You know me, I use chessboards, but you can just draw a line top to bottom and just tell yourself, either I'm going to trade this range or I'm going to walk the fuck away. That's it. That's all you have to tell yourself. Me personally, I would have traded it short all day. I'd have just been short. But you gotta know the context of the market in which you're trading, right? There's no need to follow price and review, what we did inside of what macro. We were consolidating. So if we were at the high of the macro, we traded down to the low of the macro. We were at the low of the macro, we traded down back up to the previous high, back down to the low, back down to the high, and then finally a dump and then a sweep back up. It was boring, right? But it's painful, right? Like the agony of, okay, I'm a short here because I think it's gonna break. Damn, pops back up. Okay, I'm a long here because I think it's gonna keep going. Boom, it dumps. That right there is enough to smoke you, and not even mentioning trading in here, right? Oh, we gotta push above this high. I'm gonna take longs off this higher low. There are no higher lows and there are no lower highs, lower lows and lower highs inside of consolidation. This is where the market has the green light to do whatever the fuck it wants to do, right? It's a goal inside of consolidation is to generate liquidity. So if you haven't identified the high and you haven't identified the low inside of consolidation, you're gonna get smoked. Your best bet is to identify the consolidation before it starts, okay? So remember, yesterday we had a huge rally where we took out a multitude of highs. High probability of consolidation the next day, right? Just know that every single time we have an aggressive rally, there's a high probability of consolidation the next day. It doesn't mean it's gonna happen, but it's a high probability. All right, let's move over to the NASDAQ. And again, it's the same thesis. I'm not going to go over it. I just want you guys to see, for those that trade the NASDAQ, it's the same thing. You go to the 1 hour, you start at 1800. I already did this with Valdez, but you can see this thing was in an 81 point range for Tokyo. Now, it doesn't mean that we're only going to stay in an 80 point range for New York, but if you stretch that range out and you see we're only staying in an 80 point range for New York session. We had unemployment claims today. We had freaking more news and something else. 9:30 open was trash. It was a 14 point candle at the open. These are 1 hour candles on the NASDAQ. This is the NASDAQ, the thing that prints 100 point candles in 1 minute, right? This is an hour candle. It was 57 points, right? This hour candle, what was this? This is a whole hour. It was 34 points. So it would behoove you to recognize those things as soon as possible, right? The sooner you recognize them, the better you can just avoid them completely, right? But those are the things I wanted to cover in today's market review. A little bit more psychological than breaking down the technicals or whatever. But that's all I have. My son's pulling up, so the dog's about to go crazy. So I'm gonna get at you guys later. My name is T Hobbs. This is the market review, and catch you in the next one, man. Peace.